What is up, everyone? How you doing? We are here. I'm just quickly flipping out the chat on my screen. And ta-da! What's up, everyone? Cut down the music here. So, sometimes I'm wondering, by the way, if I should just have like a non-copyrighted music playlist running in the background while doing the analysis, so that you guys have something to listen to if I'm quiet or just when we're chatting. I should make it soft in the background, but I don't really know a good non-copyright playlist type of playlist, music. So I would need to do research, but you know, in the first 2 years we managed without. It's not like it's a bad thing, but I don't know if we can find something with a bit of a vibe on the background. You never know what kind of music like appears in those type of playlists. You know, it can be really shit, can be really good. So the second song in my opening of the live stream is actually a non-copyrighted song. It's Samurai by Jim Joseph. That's a great song. Really, it's a great intro song. But sometimes once on the stream we actually tried a playlist, a Spotify playlist, non-copyrighted songs, and some of those songs are ass. So it's difficult to find a balance. But yeah, welcome everyone. I need to get some water. I need to get some water. Trying to drink 8 glasses a day, because I don't know if you are having the same problem, but I am very good running on very little water during the day. I really need a bottle of water on my desk for me to actually drink more, because else I just go, and then by the end of the day I had 2 glasses or something. Like, yo. And I'm also checking my my water now. Yesterday was a good day. 8 glasses, solid 2 liters in. So got the journal. But yeah, hopefully you're doing good. We are going to cover Elliott waves, of course, on Bitcoin. And I'm going to also talk more about, not because of the drop, but it's something that I thought of when I was away. So before the live stream, by the way, in 5 minutes, we have some high impact news. Let me actually start with this. So that's why I go live a little later than usual, because we have this going on here. So let's see if anything happens. But I was out and about. I was out for a run, and of course I analyzed the chart so much that and probably you as well, you know the chart. Like when you close your eyes at night and you think about the chart, yeah, you know exactly how it looks like, right? Like it's picture. And so I was out for a run, and at the top of a mountain, I was just sitting down for a little bit, and I was thinking about the chart, and I was thinking about one of the 4-hour time frame scenarios, and I want to cover that, especially, and I just want to talk about it because it's not really, I haven't covered it in the detail that I want to do in this live stream, because yeah, we have a bit of a move down ranging between the daily and the daily naked point of control. Current range here can be labeled a wave 4 and then 545, to the downside. All cool, all good. We will cover the higher time frame, low time frame, etc. But I just wanted to cover a scenario that, if you do take out this low, there's definitely the potential of a bigger three wave, and what that is going to be covered. So I just wanted to talk about it. It doesn't have the highest probabilities yet, but if you take out this low, I don't know, this range becomes incredibly long compared to the move up, and then it starts to be a bit of a struggle for bulls as well. And so anyway, that's also why I have the 382 on my chart. But hey, we're going to cover that stuff. What's this? Oh, this is the impulse down. So just so you are prepped, I suppose. Oops. We had bearish CVD divergences at the high over here. You may have seen them if we go up here. This is the 3 minute, but you can see bearish CVDs here at the high, also on the 15-minute time frame. Bearish CVD divergences, the more local, the more important, and the CVDs on the right side are the important CVDs. You can see that also at the moment here, we have some bearish CVDs. We are in a downtrend, so any bearish CVD locally is, of course, very important. This low here was not made on any level that I have, the daily here below us. So it would still be interesting to then touch the daily if impulsive. 1, 2, 1, 2, 3, 4, 5, 4, 5. We have an order block here that would be important support to the downside. That's this area between 95.7 and 96.1. Preferably, we just actually do not take out that low. But anyway, let's cover some stuff on the 4-hour time frame, because that is that's what I was thinking about. And of course, before we jump in, what's up, everyone? Sam, how you doing? How you doing? Hopefully your knee is doing better. Engine, welcome. Kiwi, what's up? Been a while indeed. But hey, it's a time zone thing as well, right? I mean, you live in New Zealand. It's not easy to connect while it's pretty much midnight there. Jeffrey, how you doing? The wave have been calling me back recently. Took a bit of a break. Have a lot clearer mind now. I mean, basically what I was doing just now is what I was talking about is the same, right? I go out for a run. I'm not behind the computer, PC, chart, and all that stuff. I'm just out and about, and then I think about the chart, and you get certain ideas. It's good. It's good you had a break. It's very, very much necessary. Trading can be a very stressful endeavor. Abdul, welcome. Maybe a Band-Aid. What's up? MT from Florida. Oh, I'll be in your back garden very soon. You call it a back garden, achtertuin in the Netherlands, but garden, I suppose, because I will be in Florida this month. Daily profits, how are you doing? Powell speaks soon. Yes, we have 40 seconds left, so make sure you trade safe. Actually, before we cover the 4-hour, let's have a look what happens locally. So for an impulse, we still look for more downside, as this would be your count. Invalidation for a blue wave 4 is this 618, and for a green wave 4 is that 618. So I have them color-coded on my chart, but you would be looking for 1, 2, 1, 2, 3, 4, 5, 4, 5. If price continues down and volume increase, we have to be aware of more 1, 2s. But yeah, so let's just have a short observation here as the news hits in, well, pretty much now. So a few seconds, put this on the chart, see what happens. So this is, the news now, Fed Chair Powell testimony. No idea what it is, but it might increase the volatility. So let's keep an eye here on what happens. If price moves up, touch the 618 here, it invalidates wave 4 for a blue 1, 2, 3, 4, 5, which of course is bullish. In that case, your bearish scenario would be a 1, 2, 1, 2, 1, 2. So it's basically triple 1, 2. But that's not ideal. So keep an eye on it. But as long as we don't touch it, this impulse to the downside looks pretty good so far. No, 1, 2, 3. Highest volume in the recent move down. Range in the 4. Get another 5 down. Range in the 4. Another 5 down. Bounce on the order block around 95 here. 95, 8, 9. And then we'll take it from there. But we're going to start the analysis in a second. The music is how I feel when I'm trading. Errol, welcome. Toot, Mark, what's up? From Turkey, no music, have music. The link above has royalty-free music. Yeah, links can't be shared. I don't actually see a link here. Daniel, welcome. Welcome. Fijn dat er weer een livestream is. Good to have you here, man. I missed the Trunks Rage picture in the chat. And Yasin, welcome, man. Also, why is everyone popping in here? Good to have you guys here. I'm doing very well, thank you. Chainlink Crypto, what's up? How are you doing, Yasin? It's been a while indeed. Nearly 4 a.m. What the hell? Yeah, and that is why we miss out on seeing one another. No? I would literally see charts in my dreams. Oh, I still see them. I mean, not really in my dreams, but when I lay in bed at night, you know, and you're not yet sleeping, sometimes I'm just thinking about wave counts and probabilities, and I'm just counting in my head, you know. RJ, 2 times from Florida. Oh, what's everyone doing in Florida, yo? I'll be there soon as well. +1 traveler in Florida. Kiwi, 5. Yeah. It's good to set alarms as well. You know, what's up, Rudy, by the way? Rudy, entrepreneur in Belgium in the transport industry. What's up, man? Jay-Z, Charbel, welcome. Tino, good to have you here. Okay, let's start. So, yeah, let's start the analysis. We'll get to the lower time frames again in a second. 4-hour time frame first. Oops. Okay, when are we? We're 17 minutes in. Pretty good. Okay, cover the 4-hour. These two. Wait. Okay. Okay. Very nice. Let's go. Any reason you prefer the CVD line chart? Yeah, I don't know. It's just how I grew up, so to speak. I can't read CVD with candles. I started with lines. I've never done anything else than CVD lines. So that's why. Nope. Okay. 4-hour time frame, and then of course we will zoom into this wave 4 for a bit, because that's what I was thinking about when I went for my run. So in this scenario here, you're still looking for a wave 5 to the upside, so it's still a bullish scenario, of course. And here we then have, you can see lots of 1-2s. Just to explain the structure, couple of 1-2s that you're grinding structured to begin the impulse, sharp move up, and then you get your grind to the upside. This is a typical impulse: 1 2 1 2 1 2 3 4 5 4 5 4 5, and then eventually you get a bigger retracement. Yeah? Very, very typical. Start with a grind, get your move up, end with a grind. Mind you that wave 5s can, of course, at times be pretty lengthy as well. Now, the vertical lines on the chart are Fib times, and every vertical line on the chart is comparing, it's color-coded, right? So the yellow vertical line matches the yellow count, okay? Every vertical line on the chart is comparing your wave 4 in time with your wave 2, right? Color-coded, remember? And basically what you see here is that every wave 4, right, ended after the 1-to-1 Fib time. So if we count the higher as a 3, it's still a little bit tricky to count this as a nice impulsive structure. Not gonna lie, it also very much counts as, for example, wave X or potentially even a B for a WXY. This definitely has a potential corrective structure in there. But nonetheless, it's one of the scenarios. But basically here, you would then look for another 4 to end preferably at least after the 18th of February. In other words, you're just going to go sideways till at least the 18th, if not longer. Now, inside this wave 4, you need a 3-wave corrective structure. And if we start a corrective structure from the high, then it is, if I clean up the chart, it's quite clear that we have so far a 3-wave structure to the downside. Right? It's not a 5-waver unless you think about an expanding diagonal of some sort, but these are very rare. They're never preferred unless everything else fails. Right? So the probabilities are higher. This is a 3. Now that's bullish. However, this does not mean you cannot take the lows. So what I'm trying to say here is, and this is what I thought about earlier today, is you can still label this as your X. Your W. X, A, diagonal, get a B, and then a C down in a double zigzag WXY in wave 4. There is no problem with this count, as long as you don't go below 85 preferably. The invalidation for wave 4 officially is 618, but when you have multiple 4/5s, then a wave 4 of a higher degree tends to end around the termination point of a wave 4 of a lower degree. You can see that the yellow wave 4 did move below the wave 4s over here, right, and move towards the white wave 4. There's no reason that the red wave 4 can do the same. Right, but moving below that range and below 85, that would be a problem. It's definitely not something you want to see. But arguably, your most bearish scenario locally would indeed be a WXY. So then you have a zigzag in a W. You have a very short wave X. It happens. It's not common, right? This X is incredibly short. But at times, waves are quite simply incredibly short. Let me show you an example of a this move down. This was a wave A, B. On the 1 hour, this looks crazy. This was a wave C. This wave C was shorter than the 302 fib time compared to wave A. It's incredibly short. It's incredibly long for C. Not to forget, very high volume in your wave C as well. But this was a ABC as we touched the 618 afterwards. So time, of course, is never a invalidator. It is never a confirmator, if that's even a word. Yeah, I'm Dutch. But it is at least worth considering that you can have this as a double zigzag WXY moving, and that's your bearish scenario, right? I mean, this is just another scenario. But then you want to end, of course, over here between this. And then we do this, and then we do that, and then we do ups, all right? And in this case, the lower degree count is then your wave A, your wave B, your wave C, your wave X internally. I'll go to the lower time frames, but a WXY is definitely, let me go to the 1 hour here. Let me show you. So then you would count, there you go, WX, and then you have a Y. We will cover also, of course, the bullish stuff, right? Like, just give me a second here. Get it out of my head and onto the chart. Now, if price takes out this low, mind you that we do have the potential here for a diagonal, right? A 1, a 2, a 3, a 4, and a 5. 3-wave correction, another move down. So in other words, if you take this low, you do have probabilities that at least increase for bearish scenarios, right? It's not necessarily immediately, oh shit, down we go, because we do have support here still. If you do take that low out at 93.694, and one would expect a bounce still, especially in a diagonal. You would then look for a wave 1, a 2, a 3, a 4, and then a 5, 3-wave corrective structure, maybe touch some resistance, and then you get another move down. This move up then has to be a 3-wave corrective structure. However, as long as you don't take out this low, you don't really have to think about it too much, right? But it's still good to have it on the chart. But a double zigzag, right, is definitely A, B, and then you look for a wave C. A scenario to keep in mind if price takes out the low, which it hasn't yet, right? It needs to take out 94.7. And then we look for and then where's my support? Just putting it on the chart, making sure it's nice and organized. Then we have our B. Then we have preferably a very fast and sharp C, right? Not a very slow one, preferably just a very quick move. And then 87, 85, whatnot. But then eventually you want to move and then continue. Everyone's scared. Oh, bull market finished. Oh, down we go. Oh, bear market starts. Thank you for your participation and liquidity. and up we go. So let me put this for, wait, this is one, for WZY. Okay. Your invalidation is the high. Of course, again, your wave X is very short, but if you just joined, time is never a confirmator or invalidator, if that's even a word again, right? I don't know. But it does happen that a wave X, wave B, wave C, wave Y is a lot shorter, right? And in that case, you then have here ABC, WX, ABC in a wave Y extended to the 1.618, taken from the start to the end of W to the end of X. The 1.618 touched and respected, which is a target for a wave Y in a double zigzag. But you do need to take out the low in this scenario, which is at 94.7, and we're not there. We're not there yet, but this is something that I at least was thinking about. Preparation is the key to success, they say. So when I was going out for my run and I was sitting there on a pole watching trees and seeing someone actually cut the trees, I was literally thinking about the chart, and I was thinking about, okay, like if price takes out this low, then what, right? Because you gotta say, if you take out this low again here, right? Again, we're at, I will cover the bullish scenarios in a second. I sound like a perma beer or something, but I'm not. But still, this range does get very, very long, right, in time. So preferably, you actually do not take out the low. Because if you take a fib time from the start to the end of the move, we double click, toggle on all of the times, you can see that even this low here was made after a 6 fib time. For a wave B, for a wave X, even that is uncommon, right? It's not impossible. Again, it happens just like a short X, it happens, a long B or X, it happens, but it's not ideal, as ideally you do end a ranging structure compared to its impulsive move, right? If you count it impulsive, preferably it ends between the 382 and like a 4 fib time, right? This range here, which is clearly not the case. So, yeah. If we make another low, then the range becomes even longer. And even though you can count it then WXY, WXYXZ, you have to start considering the potential of such a diagonal and another move down. Okay, that being said, let's zoom out again and talk about the bullish scenario, because in the end, it's still a bullish scenario. Okay, so anyway, probabilities at the moment remain higher for the bulls. Why? Well, this first structure to the downside here from all-time high counts best as a three-wave structure, not an impulsive structure. An impulsive structure to the downside, if you really want to change market structure, if you really want to move to the downside to lower prices, start a bear market, that sort of stuff, you are looking for an impulsive move to the downside, a five-wave structure, or a contracting diagonal, 1, 2, 3, 4, 5, correction, continuation, and of course, possibly just a multi-1-2, multiple 1-2s like you had over here, but then to the downside, and then poof, you get your wave 3. At the moment, probabilities are not higher for any of these three scenarios. Right? So either for a diagonal, you still need a much bigger structure, 1, 2, 3, 4, 5, correction, continuation. It's too early to talk diagonals. Multi-1-2, 1, 2, 1, 2, look for a 3. Doesn't look good in its proportions. Wave 2, 11 times longer than wave 1 here. It's an awkward way to start such a move, but never say never. This was also a very long wave 2, but it's definitely not ideal. So probabilities are higher for corrective structure. So yeah, keep an eye on this scenario, and then internally in this wave 4. If we take out 95 or the low we made, 94.7, just at least be aware. It's all about awareness, risk management, but it's definitely important to at least be aware of that wave 4 having the potential of a double zigzag. ABC, WXY, ABC. Yes, X is very short. It's not an invalidation. Structure comes first. Okay. Now then, there's anyway, this wave 4 can be any corrective structure, right? But the WXY is one of them. You can have triangles, A, B, C, D, E, continue, right? W, X, Y, bigger X, and then get a Y, right? Flat structure, but just be prepared if you do take the low. That's all I'm saying. At the moment, we haven't yet, but preparation is important, and that's why I'm here, counting charts for all of you. So the other bullish scenario here, 1, 2, 3, 4, 5, slight difference. This is now your 3. This is labeled as a corrective top, either a wave B or a wave X. Also bullish, as you expect price to then move up. However, in this scenario, this is preferably your low, either ABC or WXY. Doesn't matter, that's your low. Triangle also doesn't matter, that's still your low. So in this particular scenario, you do not want this low to be taken. The moment you take 91.1, this scenario goes out. Because then this starts to be a complex structure and you can't count WXY with Y being complex. So yeah, we're going to think about other stuff. So the probabilities on a 4-hour time frame, by the way, are bullish. Till proven otherwise. So we're just looking for a continuation of the range. We have been ranging already for a long time again, since November. We're definitely not out of this range anytime soon, I think. So we'll definitely be here for a little longer, in my opinion. The fact this range is so long also increases probabilities. If you do move up here, you count an ABC, which is then again part of a bigger corrective structure. So very nice. Very nice. Now let's talk about the ABC while we're at it. So ABC, you count it now as a 5 waver. It's a steep move, right? It's a steep move. And if you want to count a 5, 1, 2, 1, 2, 3, 4, 5, 4, 5. Now, both of these wave 4s, that is why you have to consider a WXY or an ABC. But both of these 4s are shorter than wave 2. And also that is not very common. Most commonly, wave 4s are longer than your wave 2. Now, we hit important support here. We hit the target box perfectly. Perfect area of support. Very nicely respected. Moved up. We hit our resistance here. Remember the weekly naked point of control here, together with the daily naked point of control, right? So we touched that box, but I removed it from my chart for the sake of keeping things clean and organized. And then we started this range to the downside, which for the most bullish scenario is counted as a finished WXY. And then you're looking for 1, 2, 3, 4, 5, corrective structure, and continuation, right? Oops, do this, do that. Resistance, 104.6, 105. That's an important area on the chart. Now, because this range is so large, right, so big in time, arguably probabilities are better to label this a B for the bulls compared to labeling it a 2. It's just more common for a corrective structure to be very long or very short compared to wave 2s. Wave 2 preferably ends between the 3A2 and the 4 fib time, which it didn't, because this is beyond the 6 fib time. Something to also keep in mind. Now, first area of resistance here, 99.4, 99.8 on the chart. And then we have a small little level at 101.4, but I'm not really interested in the daily. If you do move up all that way, then, just take the high already, So, scenario for the bulls, invalidation, of course, very clear, which is taking out the low. Perfect. 15-minute for the bulls. So, my impulse was removed in the morning update. If you've seen it, we also had 1, 2, 3, 4, 5 here. Okay. You would count the impulse like this: 1, 2, 3, 4, 5. No overlap between 1 and 4. We don't like that. And then W, X, and a Y with a zigzag X and a flat structure. Find support. Then continue towards the upside. Yeah. So this was a consideration this morning. Again, important support would be this order block here, besides a daily just below us. But preferably this is like a bit of a lost area, 95.7, 96.1. So that is an order block. In a recent live stream, I covered this. But basically, you move up one red candle, and then you get the big push. This becomes an area of support. So that's one to at least consider and keep an eye on. Bearish, but still bullish. Now, I've been talking about it in the beginning of the analysis. If you take out the 94.7K low, I am at least seriously going to consider and talk in videos also about the bearish scenario, which is not a bear market, but it is a scenario that would possibly then take 91K as a low. Your bullish alternative is an unfinished WXY, which is literally what you see here on the chart. Right? So we have our first W, we have our X, and then we have our wave Y. A reason to think about this scenario has been covered in the live stream yesterday or 2 days ago, where I said, well, in your most bullish scenario, where this is WX and ABC, where this is a 5-wave structure, right? It has to be. Let me get back to the bullish scenario. Right? Let me get back here. So this is your bullish scenario. Your Y has to be a zigzag. Right? It's a double zigzag structure. So Y has to be a 5-3-5 structure. Right? 5, 3, 5. This, it looks on if you go to a 3-minute time frame, it tends to look very 3-wave-ish instead of 5-wave-ish. But yeah, okay, very low time frame stuff. But here, even on the 1 hour, but also if I go to the 15, we can see a bit more structure. And this has to be a 5-waver in a Y. 1, 2, 3, 4, 5. I mean, makes sense, right? No overlap between the low of 1, high of 4. Cool, right? We just missed out on actually that overlap. Let me zoom in for you. You can see here, we just missed out. Just look at the horizontal line of my cursor, right? This low and this high did not touch the cursor here. Right? But this wave 4, if a 4, did hit the 0.618. This one. So 1, 2, 3, 4, 5, 4 touched the 618, taken from 2 to 3. In other words, if we would count some sort of ABC, I want to actually end B here. Not there. And that basically means we got to go into complex structures again. We don't have time for that. It's a waste of time versus profitability. So your second bullish scenario, if you do take out the low, is this. Now, compared to the diagonal, in both cases, you would still enjoy a bounce on support. But the bounce then to the upside, that's going to be the most important thing. In white, in your bullish scenario, you need an impulsive structure to the upside. Has to be. You can't get another 3-waver. I'm talking about taking this high now. Right? You want an impulse. 1, 2, 1, 2, 3, boom, right? Go. Take out the high. In the bearish scenario, you want a 3-wave corrective structure. And then you continue towards the downside. And you take the low again, and then likely take that low, because below this support, there is no support. You're basically back at 90 and then 80. Because even below this low, there is no support. There's nothing. You go to 87. So that bounce is then going to be very important on the chart. So either corrective or impulsive. Now, in both cases, the probabilities are higher. You're still looking for a bounce. So at least that's something, right? It gives us a bit of time to observe the structure from an Elliott wave point of view, observe the CVD divergences, etc. Now, again, this is only relevant if we even take this low, which at the moment we haven't, right? We're still ranging here. Questionable at the moment if this move is sharp enough to actually 1, 2, 1, 2, 3, 4, 5, 4, 5. Might as well find support on 95.8. Continue towards the upside. Never take that low. Right? That's your bullish scenario as explained earlier. But got to be prepared. Got to be prepared. So still looking, if you do take the low, still looking for a bounce. Bounce to the upside. Impulsive, cool. Right? That was what we like to see. 105K pretty much next. If corrective, okay, 87. It just opens the door for possibilities that do take out that low. Now, on the 15-minute time frame, the account that I had on my chart here is as follows. This, of course, now starts to look like a wave 4. due to the size of the range. So then we have that. If price touches the 618 at 97.4K, then this wave 4 is invalidated, which invalidates the impulse to the downside, basically. But you still have this. Possibly, let's go to the 3 minutes. Also, you're in a downtrend. Do have some bearish CVDs in the downtrend. Of course, a little bit of bullish CVDs can be seen here, but bullish CVDs, when you're in a downtrend, local downtrend, bullish CVDs are only interesting if you change market structure. So you want to see higher highs, higher lows, do that a couple of times, and then look for bullish CVDs. So the same as what happened here. Look at what happened here. So to toggle on all the small CVDs. Just look at the amount of bearish CVDs here. So we made a high, right? We make a high. The price eventually here, right, comes down, up, starts to come down. Bullish CVD invalidated. Okay, it's good information to have, right? And then price changes market structure, takes out this low, right? Low, lower high, lower low, lower high, lower low, etc., etc. And look at the CVD here, this big bright red one, right? Big bearish CVD, lower high on price, higher high CVD. And then once again, not only on yellow, but also on blue, once again here, right? Trend to the downside, supported by, this bearish CVD is not interesting. This one here is not interesting. But then you change structure, you get a retracement, interesting, right? This one, not yet so interesting. I first want to see structure change. And then I might get interested eventually, but not yet. So price moved to the downside, changed the structure, bearish CVD here, bearish CVD here. Also what you like to see in a multi-one too, by the way. And then we move to the downside. Highest volume is in the recent red candle. So that is the one you would label 3. You look for a range in 4, grab the lows, finish 5, finish 3, another range, 4, another move down, 5. Keep an eye on support. This order block here around 95.8, 95.7. And from a Fibonacci perspective, I think that might be the 786, but let me have a look here. It's the golden pocket as well. So not bad, not too shabby. So you might actually reach the golden pocket. The 786 also still a target, right? 95.5. And this is, by the way, for a bullish scenario. Impulse, correction, and then continuation. So as long as you don't hit the 0.618, probability is higher. This is an impulse to the downside where more or lower prices are expected. If you take out this low before touching 97.4, 618, then look for a finished 5 to come. Start another range. Cool. We label that green 4. Final leg down, green 5. Look for support on the golden pocket. Order block, possibly the 786 as the deepest target. You don't want to, again, you don't want to change, you don't want to take the low in a bullish scenario. And then find support. And if we can finish an impulse to the downside, it's definitely an interesting area to observe the reaction for a potential return to the upside. 15 minutes flat is indeed a possibility, no joke, yes. A flat or a WXY. You can go for A, B, C, or WX and then A, B, C in a wave Y. In both cases, you would indeed then look for a flat. A WXY does give you at least the opportunity of an ABC. So you can have ABC, W, right? Wave X, whatever. And then A, B, 1, 2, 3, 4, 5 in a wave C. Wave Y. I'm confusing myself now. So W, flat, X, zigzag in a wave Y, right? So you have your A here, you have your B, and then 1, 2, 3, 4, 5 in a wave C. Touch the daily, and then, right? And in that case, you still take out this low, but you don't get another 4, 5. That's the difference. It's in both cases, you're ending a structure. So the fact that price is ranging here is actually quote unquote bullish, right? Because that's what you want to see if you're looking for an impulse or an ABC. You wait for a range to form. A range will always give you all the clarity you need. This move down, right? It's not interesting, right? It can go very far, can be very shallow, but the moment a range starts, that's where you get information. And this is currently the local 15-minute count here. So of this move down at least. So do I have anything else to add? So the daily point of control is now above us. Always interesting. SR, which is, this was the daily naked point of control of yesterday. So we are now below that. Point of control of today is higher. So I was talking about the one yesterday. But this is now our resistance, this one here. And support just below us. And then pretty much like one of the final areas of support is the order book, this red candle here on the 15. And so as long as you do not take out this low, right? The probabilities, we have bullish CVDs still on the 4-hour over here, right? Also bullish here, but preferably get a bit of structure going. Probabilities would still be higher to take out this high. But if we do take this low, then at least I'm seriously going to consider the fact that this can just be a diagonal 3-wave up and continue down. So preferably we don't. And if you do take out that low, this move up is going to be very important. 3-wave, go down, impulsive, perfect. We look for price to move up, and 105 is next, basically. Okay, difference, I just see it in the chat. Difference between daily and the daily naked point of control. I will highlight it here in the stream, but I will also recommend you to check out the following. So if you go in the description, go to the LINKTREE link, and it's there. And there you go to playlists or just my YouTube channel. Go to educational content, scroll down a bit. This is the daily video, daily, weekly, monthly, like that's question number 1. And then this is basically question number 2, volume profile. But I also cover daily naked point of controls and that sort of stuff in that video. Just to, I suppose, explain where it comes from while I, by the way, maybe a Band-Aid man. Thanks for the support, dude. We're going to have a drink together in Florida. Yeah, cheers. Let me write down Elliott wave analysis started at 18 min. Now chatting and Q&A. Put this as a pinned comment or pinned message. Okay, so a daily, this is what I always do in the morning. My morning ritual is actually very short. It's Elliott waves takes the longest, but the first thing I do is I open my folders, and I have 3. But I open my high time frame levels. A daily level is a level where you had a candle moving in one direction and closed, and then the next day moves in the other direction and closes there. And then the level where the one candle closed and the other one opens and ends in the other direction, that becomes a support resistance area. So this is a daily, that's a daily, that's a daily, right, etc. You can see that's one there as well. As long as it's not touched, I have it on my chart. The moment this one gets touched here, right, soon after I remove it because it's just not relevant. Then you also have weekly, right? Weekly, you go to a weekly time frame. You can see it's exactly the same. Red candle, next one green on your chart probably, and then weekly, yellow. So, yeah, and even more. I also have a yearly. Anyone interested in 3K per Bitcoin, testing the yearly level here? Okay, anyway. So that is that's the daily, which is just a support resistance level. It's not volume based or whatever, compared to a daily naked point of control, which is volume. That's the blue levels. The red levels are just normal point of controls. Blue are value area high or lows. Red is just point of control. It's a volume profile. And the blue ones, D and POC, right? Or yellow ones. Where is it? Where's my first yellow? Oh, wait. Here. Weekly naked point of control. Monthly naked point of control. Those are areas where in that particular time frame, most of the volume traded was at that level. However, after that day, week, or month closed, price never returned to that highest volume area. So it becomes a support resistance area. For example, we had a volume profile, we had a weekly naked point of control here and a daily naked point of control here. It's always going to be strong resistance. It's something to be aware of. And that was the weekly naked point of control of this trading week and the daily naked point of control of this day. So it's the highest volume traded area, right? Red line over here. And I bet if I have a week, I don't know the week, 1st of Feb, no idea, but maybe if I do this, it's similar. Yeah, there you go. So yeah, it's important. So it's volume related. And you can see as well, right? The week closes and a new week opens, but you're down here. You haven't yet touched the previous day point of control or the previous week point of control, which is here. You open the new week and a new day, but price is somewhere down here. So that is when this becomes a naked point of control of that day, of that week, which then provides you with an SR level. And that's what you see on my chart. And those are the only two things I check in the morning, actually. I only check the daily time frame for a few seconds, and then I check the naked point of controls, and then I go into Elliott waves, maybe check some volume profiles and some fibs, and yeah, then I'm done. Yep. Let me have a quick look up here. What happened? Where were we? Less is more, I'm finding. Christian, welcome, man. Wait, we were here. Yeah, so I answered that question. Could you please share how you add the CVD divergence indicator to an AGGR chart? It's written in Discord. So I recommend to go to Discord, which is here. So you go to the Discord channel and then go to the Good to Know channel in Discord. And then here it is. Open the website, click on the three dots right bottom corner, then on settings, then on new, and then select the template that you saved somewhere in your folders. That is the way to that's the way to get it on the chart there. Welcome, Obese Boss. Welcome, Leon. Good to have you here. No Joke, Nutrition Trader. What's up, guys? Your object tree is so organized, I feel ashamed of my charts. I think the object tree is a reflection of your trading behavior and your chart. If it's incredibly messy, I don't know how people do it. When I see an Elliott wave analyst with an incredible messy chart, the first thing I'm thinking is, you're either a beginner or a losing trader, or like it just doesn't click. Like, how can you have a business environment because trading is a business? No? I mean, you're a selfpreneur. If I run a business, it needs to be neat, tidy, organized, structured. You know, I need to organize everything, and it's a personality thing as well. Back in the day, I used to have lines everywhere, but that was also my starting period, I suppose. And eventually I got into using boxes to organize my trading and scaled down on the tools I use. Less is more. And it significantly helped me in my trading. 100%. So I can very much vow for cleaning up the charts, organize your tree. Just if you haven't yet, put a couple of hours in organizing your tree. These lines here that I have, these are just horizontal lines, right? You just put it on the chart below the zero price or whatnot. You change the name to whatever you like, emotes, horizontal lines, whatnot. And there you go. You got yourself a little divider, right? You can make your folders, right? So you put TA on the chart, you press shift, you select it, you press this folder icon, you right click, rename, right? And then you put it in your, wherever you want to put it. Just put a little bit of time into organizing. Also, if you use 100 different tools, I suggest scaling down. Only pick your favorites, a handful, right? I use volume, like daily naked point of control. SR, like the daily. Elliott waves, CVD, but CVD is not really something on Tradingview, right? So it's a different thing. And then, yeah, Fibonacci. But Fibonacci is part of Elliott waves, volume and volume profile, daily naked point is the same. So I guess, you can count my tools on one hand, really. But I would suggest the less is more principle. No? Organize the chart, put a bit of time in it, and you will see the results in your trading. I'm very confident about it. It did for me because it avoided me to have analysis paralysis, where I got so much shit going on, I don't even know what to trade anymore. But by the way, I have a video about this actually on my channel. Wait. Let me have a look here. So we go to my channel. Cool. Oops, that's the wrong link. YouTube. Go to my channel. Wait, let me show you my chart back in the day. Diagonals. Less is more. Oh, it's literally the title of the video. Okay, let me at least cut out the music for you. Sorry for the earphone users there. Yep. Can we skip the ad, please? Oh, we went to luminescence in these. Now, this is, by the way, this is not a joke. What I did in this video. This is my real chart back on the day, long time ago. This is my real old chart, right? And this video is made a year ago, but don't get me wrong, that was when I had a YouTube channel. Before I launched the YouTube channel, I already had a new organized chart, right? But I never deleted this chart, right? So when I made this video, I came back to this chart to make the video, to explain what was going on. So when I started, I used many different tools. Almost every tool you can think of in TradingView was on my chart, right? And not even tool-wise, also level-wise. The weekly open, the weekly close, the weekly value area high, value area, and then the daily open, the daily close, month, and it just became a mess. And then you have the VWAPs, the Fibonacci's, all the other stuff, right? Fib times, channels, pitchforks, speed frames, AVWAPs. Like my laptop was struggling when I was old laptop when I was recording this video. This was, if I turned everything on, this is how it looked like. You can see it here. I turned all the folders on, and this is what I call the problem. So of course I made chapters, but yeah. And then eventually we get to the solution. Look at the difference here, right? Look at the difference. So in this video, I explain how to make target boxes. What I do, the blue stuff here, right? That's where, and then I go through the different steps on how to make target boxes, and then eventually you hopefully you have a clean chart. So you can always check out this video. It's in the educational playlist on my channel. But try to organize and simplify things, and maybe you will have less setups, right? But does that mean you're less profitable? I know enough traders that scale down in their amount of trading and actually earn more money having less trades, right? They just wait for their very good setups instead of trying to trade every level, and they have like 100 levels. Generally, beginning Elliott wave traders tend to have charts that are not really organized. It's generally quite easy to see if someone is advanced or not from an Elliott wave point of view. If there is someone that has 3 different counts on one chart at the same time, run. Your efforts are, WXYXZ, always the legendary name. Cheers, man. Welcome, Raul. And happy to hear that you are improving on your Elliott wave counting. It's nice that I can add my 2 cents. Thomas, welcome. This is a retrace of the last impulse up So I've been waiting for. I'd be sad if not 87K, just holding everything spot this year. Spot trading, right? For many people, a great idea as well. Cheers, maybe a Band-Aid again. Thomas being the one that got lucky there. Particles of time, if we apply the observer effect from physics, then the more participants there are focusing on the chart, the more that chart becomes evasive. This makes Bitcoin more difficult to chart. Yeah, I don't know. I never really... Sometimes I get a question like, oh, is Bitcoin different now than a long time ago? And I'm like, I don't know. I've never experienced difficulties with Bitcoin or significant changes in the price action now is a lot more difficult to read than in the past. I don't think so. It feels very much the same. And of course, you have then the AI, the bolts, the ETFs, and everyone tries to find something. But I from my experience, wave 4s are always tricky, right? They're most of the time, they're complex structures, which they are known for, right? Wave 2s are oftentimes sharp corrective structures, right? Wave 4s are typically complex sideways corrective structures, right? And that is something that dates back to the very, very old times of Mr. Nelson Elliott himself, where he identified this. So, yeah, I mean, this structure must have been, I wasn't in the market back then yet, but that must have been quite a pain in the ass as well on the lower time frames, right? So you get a first move down, and then triangles are always terrible, or triangle-looking structures. They're always really difficult. Because a triangle is never your first option when a move starts. It's basically all about, is this move up corrective or impulsive? Well, quite clearly, this is a 3-wave structure, right? So instead of zooming out, I would zoom in. This is very clearly a 3-waver. So you would expect to see the low taken at a later stage. That's then the highest probability scenario. Now, eventually we take the low here. Cool. Next move up, all right? 5-waver or 3-waver. Now this, I can imagine, would have been a possible confusing one. 1, 2, 3, 4, 5. But then your wave 1 has this interesting little 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 2 maybe bigger than the 4 here. Right? This would have been a tricky one. Is it impulsive? Is it corrective? Right? But yeah, any time frame, any time S&P 500, you can go back 10 years, 20 years, and you will find some crazy structures as well. I never really experienced the market as being more complex or difficult to read than structures back in the day. I also, this is, I suppose, I love Elliott waves for the fact that it's a game. It's a puzzle. I'm always playing with the market. I'm puzzling. I'm trying to find a solution. Basically, I'm playing a puzzle game every day. You have those mobile apps where you try to solve like some puzzle. That's basically Elliott waves in a nutshell, right? You're trying to figure out what's happening, get the highest probability, solve the puzzle. And even though in those games you go up in levels, I suppose that a wave 4 is a higher level, more difficult compared to counting a 2, right? And a wave 3 and an impulse is the easiest one to spot, right? So, yeah. But eventually after difficult comes easy again, right? And if you don't really know what's happening on one time frame, then either zoom in or zoom out to another time frame where you do find clarity. So if you have no idea what's going on here in this range, just go to the 15-minute, right? Go to the 15-minute. Look at this part of the chart. Don't care about anything else and just have this on your chart and be like, okay, if it's an impulse down, we don't want to hit the 618. We want to make a new low before the 618. If price touches the 618, okay, cool. Probability is higher for this move down to be a corrective structure. Right. Most bearish scenario becomes a 1-1-2, but that's not really a highest probability scenario. So, and then you only focus on this instead of zooming out too much. So this range, of course, has been tricky because of the complexity. The start was actually very easy, but then this is where the mess happened, right? This structure here, that's the messy part. This was the easy part. But by all means, we were just waiting for the box to be hit. Eventually we did. So yeah, I've not yet experienced more problems counting. I do like to count myself, but maybe one day I can somehow get my way of counting into an AI or something, and then just let the AI count according to my approach, which would be an interesting development. Thanks, James. How do you approach an artist if one chart is invalidated or close to it, but on another chart it isn't? Just have one main chart. So Coinbase is my chart. I do not care about Binance, Bybit, Blowfin, BingX, Mexi, Kraken, Index, anything. Coinbase, I don't trade on Coinbase because I trade on Blowfin. But I don't care about their chart because I know based on statistics that the Coinbase chart is the best chart for at least my way of counting and the way I analyze the chart, because I compared this chart with the candlesticks, the wicks, the volume with other charts, the Binance, the Bybit, the XYZ, and Coinbase just came out best. And since that moment, which already is a long time ago, I've always used Coinbase and I never use any other chart. So that's my take. So I have one main chart and I don't look at any other charts. So yeah, you gotta preferably just pick one and trade that one or analyze that particular one, and try to avoid looking at too many charts because it gets messy. And that's also what then leads to analysis paralysis and, oh shit, we did take the high there, but we didn't take it there. Okay, which chart can I trust more? Or you can build statistics on some of the charts that you have now, right? Build statistics on which one wicked that high, which one didn't. Is this a wave 3 volume or not? And compare the candlesticks, the wicks, and the volume, and see what works best for your way of trading. But for me, it's Coinbase. That for me is the most respected chart with the levels that I have, right? The boxes that I have, the Elliott wave count. Yeah, Bitcoin / US dollar 15 Coinbase is at the top written here. That's the one I use. Yeah. Let me skim through this a little bit quicker. Okay, so we covered this. Particles are, don't trade Bitcoin. Elliott macro count rate is totally different to everyone's, and so far it's tracking as expected. Overall, I'm bullish and expect a massive price surge soon. You're looking for an expanded or an extended 5 particles of time? Is there a chart that is most trustable? Because I look at the chart on Binance and there's a difference at important levels with Coinbase. I guess I just answered that question. In my defense, I kind of sort my less into separate chart tabs, but I also have a very... Okay, but that's good. I mean, look, I use the object tree. If you use multiple tabs, that also works, no? You can also use multiple charts, right? So you can use different charts here. Where is it? This is my layout setup. Oh, wait, here. Yeah, I also have 2 charts. I have a trading chart and I have the BTC chart, basically here. The trading chart is very simplified. Like I have no price, no time. I only have my boxes and that's it. And then I write there. It's like my journal chart. That's where I type. That's where I make my plan. That's where that's my station. Let me show it. Not everyone. I guess many people have seen it by now, but so. This I even had price of because this morning I was just focusing on my trading plan and I don't have price look, so this can be my chart. I don't have price on the right, I don't have time at the bottom because it's not important for my trading. My chart is gray, or at least the price is gray. I have a couple of folders here, as you can see. Trading plan, categories, which is like the A+A. I added that recently. Positions, swing positions, trade examples. When I'm checking my categories and I'm like, past trades, I can just look at examples. Sometimes it's good to review your own trading. A channel here, which is for the diagonal. And then horizontal, what's this? Oh wait, this is the channel. This is together with the channel. So that was when we were somewhere here at the top of the channel. So I'm just tracking, do we hit the top or do we not hit the top? But that's not really relevant now. So you can see this is a very different chart. Yeah, I have my boxes, but I don't have price. I don't have dates, right? Of course, the cursor has, because I can't turn it off. If I can turn it off, let me know. But I couldn't find a setting to turn off the price on the right and the date and time at the bottom. I do like to have the cross, but I actually don't want to have price and time at the bottom. But yeah, anyway, you can see it's a very different chart, right? And this is basically the trading chart that I have. Cheers, Unbound Sniper. I mean, look, when I started, again, like, don't forget, you saw the video I showed earlier. When I started, my chart was a mess. Really, really bad. But as you go along, you learn. What's the probability for continuing wave X in an ABC structure compared to a short-time adoption in a bear scenario? What is the probability for continuing wave X in the AB? Okay, so what's the probability for getting a C to 105, basically, compared to a short-time WXY? At the moment, the bulls have a higher probability. So the ABC, right, for then a bigger X or a bigger triangle. However, if you take out 94.7K, you gotta, it's gonna be 50-50, because the moment you take out this low, it's about the retracement. It's about the bounce. Right? Is this a 3-wave or is this a 5-wave? That's gonna be the decider if you do take out this low. So yeah. And by the way, I had this fib time on my chart, a little bit of extra information. Didn't actually talk about this one. The reason I have this one on my chart is because of this. I was like, let me just track that just in case. It's a very ugly diagonal, if you want to even call it one. 1, 2, 3, 4, 5. It's horrendous. 3 is like nothing in time compared to it's low probabilities. But still, I was like, just imagine. So if this indeed would be a finished diagonal, right? You want a 3-wave structure. Again, probabilities are probabilities. Most commonly, structures end at least after the 0.382, right? So in other words, if you are like very bearish and this is a diagonal finished A in your count, then the 382 sitting 12th of Feb, 5 a.m. Central European time would be a minimum target for a B. So you preferably get a 3-wave structure and then bloop, you go. Not the highest probabilities, but that's the reason why I had the fib time at least here. It was in my folder. I was just thinking about it just before the stream, and I was like, oh, let's put it on. Do you have a video? No, I don't. Well, I don't have a video specifically on fib time, but I have a whole playlist that talks about fib time, basically. So yeah, there we go again. So we have the Linktree, right? Link in the description. You scroll down, go to the Elliott Waves Beginner's Guide. So it's not specifically about fib time, but you will see how I use it. Because if you go, for example, to the impulse video, right? So we click on impulse. Okay, the video is muted. Imagine without any noises. Do not. There we go. And we go to the fib targets, fib time. So we go to fib time. So now you can see. I put fib time on the chart here, and I explain how I pull the fib time as well. Right, so here I'll say from the low to the high of wave 1. You double click at the high of 1, you get the fib time for 2, preferably ends between the 382, and then I talk about the 4, right? And that's your most common area for your wave 2. I can literally talk about, I know what I say, and if wave 2 corrects longer than a 4 fib time, you really got to think twice about, is this a wave 2? Because the probabilities really start to decrease if you go beyond your wave 4 fib time, right? So commonly, this 382 to the 2, that's nice, 382, 4, okay. Now for a wave 4, right, taken from, there we go, the end of wave 1, Kun. A little bit quicker, you're chatting too much. So we take a fib time for our wave 4 from the start already. There we go. A little bit further. So we take it from the end of 1 to the end of 2 to the end of wave 3, comparing wave 2 with wave 4. So you can just go through the videos and then you'll see and get a good idea of how to use fib time, because I explain it for every Elliott wave scenario. Yeah, like every scenario here is covered. Everything, including fib time for all of these. Right, and that's in the end that the most common fib time targets. There's always exceptions. Yo, what's up, Tim? Describing it like a game/puzzle. Yeah, I mean it is. That I don't know. It's don't you feel the same way? Like people here in chat, like Elliott wave analysts. I mean, why are you into Elliott waves? I mean, why? That's not a good question to get the answer of. It's like a video game. Of course, we all want to make money. I love Elliott waves because of the psychology aspect and because of the puzzle. I mean, yeah, it's just a really fun way to analyze, and it gives me the opportunity to read the chart like a book. I can read the chart. I know what's going on. I know, is it corrective? Is it impulsive? Oh, it's higher probability corrective. Cool. So I want to trade in that direction, right? Because if it's corrective, then I expect the high or the low to be taken. And sometimes it's easy. Sometimes it's complex. Sometimes you win money. Sometimes you lose money. But it's a fun thing. Yeah? It's fun to analyze the chart using Elliott waves. Oops, keep refilling. I also got to go, guys. We've been online again for an hour 17. 5 p.m. local time here. Got to add another glass in my tracking app because we are tracking. There we go. So far today, 1.5 liters. Not too bad. Not too bad. Yeah, Florian, that's also nice that you say that, because it's also, I guess, a reason. And I don't know if you were here at the beginning of the stream, but I was running earlier today and I was thinking like about the chart. And one of the things is, all the analysts, including me as well, like, yeah, okay, probabilities are higher for corrective structure down here and, take 102K top. But if you take out the 94.7K low again, you got to be very aware of bearish scenarios, because if everyone's looking up, I mean, what's the chance? So yeah, I covered that in my analysis earlier today. If it doesn't reverse by tomorrow, I'm putting a 5 on the all-time high. I see. Yeah, I already got that going. Chart looks like a rainbow with all the colors. Yeah. Earlier, every video and live stream teaches me something new and improves my confidence. Thanks to you, I'm on a good path to long-term profitability. You played a big part in that. Thanks, Yannis. I mean, props to you for putting in the work, right? Because it's not guaranteed. People can watch the content and be like, couldn't analyze the chart for me. I don't have to do it. But it's great to hear you learn, you execute, you implement, and you improve. And I'm happy to have played a bit of a role in that, but props to you to executing. Elliott waves it's difficult. It's difficult. It's not just, it's not your, let me pull a trend line here and then, third touch, boom, trade. It's difficult. It's tricky. And you have executed, learned, studied. It's the only way to go. Apparently we have China in chat as well. Welcome, China. How do you trade if every scenario you discuss is invalidated? Why do you use Coinbase? So it's a funny question, though. I'm not sure if that's the correct question you actually wanted to ask. because if you've been here for a longer period of time, including the video of this morning where we discussed several scenarios, you know that the hit rate on the channel is above 90%. So it's an interesting comment here. You can go back in time and try finding me a video where we were significantly wrong before another update. But beside all means, you trade the highest probability Elliott wave scenario, right? If you purely trade Elliott waves. I do use other tools. So I use my boxes, I use my levels, I use CVD in confluence with my Elliott wave counting, right? So that is the way that I like to trade. I found my set of tools and yeah, that's how I execute. Another thing I suppose as well is if every scenario I would analyze since the beginning of the channel would be invalidated, I wonder if I would ever had 15.8k subscribers in almost 2 years now. But the hit rate is incredibly high. But I have 2,000 videos on the channel. Feel free to have a look, of course. The Coinbase chart, because it's the best respected, best volume, best candles, best wicks based on statistics. But perhaps the value in Coinbase is different. I actually don't use the Coinbase point of controls. I use the Bybit ones because that's what I'm used to. So in ATAS, I use the futures BTC USD chart. And that's where I get the daily naked point of controls from. And I put them on the Coinbase chart. Yeah. You'll improve, Mari. You'll improve. Exactly, Ace of Trades. I have price dropping to about 96. That's there. That's in confluence with the order block we have. Then reversing to a sharp price increase to near highs. That's 105. On the high time frame, this entire range for me since end of 2024 is an ending diagonal. Oh wait, I see what you mean. I see what you mean. So since the beginning. So in that case, end of 2024, ending diagonal. I mean you're not talking about this, right? I think you're then talking about 1, 2, 3, 4, 5. This. No? So it's an option. It's an option, a bit early, but it's definitely an option on the chart. Yes. In that case, of course, you're going to correct. Every wave to the upside is going to be like 3 wave structures. That's going to be messy because it's going to be like WXYs up and down, left, right. Like holy moly, it's going to be an interesting way to end. So it makes me think of the 65k high we made in 2021, right? So we had a diagonal structure as well on the daily. I remember that one. Though we haven't retraced it yet from the impulsive bounce Monday last week. A little bit, yeah. So daily below, order block at 96.8, I believe. It's an interesting area. Divine Hood, good. You really are one of the best real trades on Tube. Jot purely Elliott waves like you, but I can see your real. Thanks, Divine Hood. And yeah, I mean, there's YouTube is it's a weird place, I gotta say. So when I got into trading, I obviously go to YouTube as well because I want to learn stuff and see what's up. And then you get to, usually the first channels you see are not necessarily the most educational or greatest trading type of channels. Generally they're a bit hidden in a way. But I guess everyone follows the same YouTube path as well. And I'm happy that you ended up here as well. So yeah, I mean, we analyze the waves. I trade the waves myself, right? I trade Elliott waves as it is. And one of the things that I do is when a structure is corrective, I will look for a setup in the other direction. So for example, I mean, we can just take the most recent example here, right? So probabilities here were higher. This is corrective after the high. And then I look for a move to the upside. I literally had a limit in the box on top of the daily naked point of control at 95,350. Exactly. So yeah, it's you trade the probabilities, and probabilities are generally related to, is it corrective or is it impulsive, and then you can execute based on, of course, after the probabilities were higher for a move up, I didn't enter here because I had this support and I had this one. So that's where additional levels come in. It can give you a bit of a better RR. But I'm happy. I'm happy you're here. Thanks for hanging out. Thanks for subbing. Thanks for chatting, and a lot more to come. There's a lot of things happening in the background. I can barely not keep up. I'm still here. I just said 10 minutes ago I would leave, but there's a lot of things. There's a lot of things going on in the background. So it's fun stuff. I only trade YouTuber calls. You only trade YouTuber calls? Well, hopefully you can unsub on the other YouTubers if 20% is your win rate, and happy to sub here, yo. What the fuck? 20% win rate, what are you doing? 1 to 5 trading? Like, I don't even know who you're following, but that's horrendous. Unless you have a very good RR, you'll still be profitable, but I wouldn't survive on a 20% win rate. My psychology would go to shit. It would be a problem. Joking, mate. Okay. You never know. It's YouTube. Yeah, it's YouTube. You never know who's on the other side of the screen. What's real, what's not. But I mean, look, 20% YouTuber calls. Oh man, give me a break. There's enough channels where you will have a 20% win rate, I'm sure. I do think that the better Elliott. No, I can't really say this because a good or bad channel is not one-on-one related to the amount of subscribers the channel has. So there's channels out there where technical analysis channels that have a lot of subscribers, but it's not great analysis, right? And that's okay. Many people enjoy it, and it's fine, and that's perfect. But Elliott Waves is a great niche. It's not easy to follow. It's difficult. It's a lot of terminology. And if someone does not know all the rules and guidelines, it's easy to look at a video without knowing if it's correct analysis or not, right? Is the analyst in question that I'm watching the video of, is that analyst good enough? You don't know if you don't know Elliott Waves, right? You might just think like, okay, cool, this is the probabilities. So the reason this channel exists is because of my frustration with other YouTube channels in the Elliott Wave space that didn't always stick to Elliott Wave rules or guidelines and didn't update every day. So I think a great channel is Green Star Trading. He's a good dude. He does the high time frame, doesn't really go into the low time frame, but he tends to do the high time frame. X-Force Global is a great dude. I think Tony is a great analyst as well. He's part of Trade Devils. And like, what's the other? PK. I never actually chatted to PK or Tony myself, but they're great. They're great people. It's not easy to find a good analyst, but generally you feel if it works or not, right? You see it in the comment section, you see it in the community, but online, when I started the channel, I found it very tricky to see a channel that uploaded at least once a day with high quality analysis that sticks to the rules and the guidelines. Because when I watch other videos, I can see if someone does not respect a guideline or a rule, and I get frustrated. But probably 95% of the people watching, they don't care because they don't know. They don't know. They just watch to see, do we go up or down? But they're not invested in Elliott Waves. They don't know all the little things. But the goal of the channel is to be incredibly rules focused and guidelines focused. providing, of course, daily analysis, which we do, unless I travel, like to the US, which is coming soon. I mean, then it's difficult, right? And then I go on winter sport as well. So generally during holidays and stuff. And I'm still a trader. YouTube I do for fun because I like, trading can be very lonely, and it's nice to share my analysis. I love helping people and all that good stuff. So, but yeah, I also have other stuff going on and live and trading myself and whatnot. And but generally every day there's a video or there's a live stream at least on the channel. And yeah, we analyze the chart. So there is a YouTube channel, More Crypto Online. Do you know him? Not as a person, but I do know him as an analyst. But that's one of the channels where, look, I don't know the guy. I think probably he's a great guy. I don't know him personally. But his analysis is one of the reasons that I made my YouTube channel, as that was one of the channels that I got frustrated by. And he might be a great person, but he's not that great of an Elliott wave analyst. I would recommend other people over that channel. That's the reason why I didn't mention it. He has one of the highest amount of followers for an Elliott wave channel, but that's what I mean with many people follow it, maybe because it's very simple in a way, but there's many mistakes or in rules or guidelines or little details that you can see. When I look at the chart for 3 seconds, I can already see something that's like it's just not really according to rules and guidelines. And that's frustrating because I know all the rules and the guidelines, but the other 95% watching, or even 99%, they won't know. That it's fine for them, and that's perfect. What I do respect, so that's the analyst part. What I am impressed by is the amount of work this guy does to his channel. He uploads a sick amount of content, different languages. Now it's MCO Global, I believe, as well. Like, as an entrepreneur, I'm impressed, right? He's put a lot of time and effort into his endeavor, and he has a great amount of success with his channel. I don't know how many subs he has now, like getting close to 300 or something. I mean, look at my channel. We're at 15K. I mean, we can't even compare, right? We can't even compare the size. It's incredible what he's achieved as an Elliott wave analyst, which is a niche on YouTube. It's just that the analysis itself oftentimes has something that doesn't match the rules and guidelines, which I get frustrated by, which is one of the reasons I made my channel, because I was like, okay, you know what? I'm over this. I just go and do it myself. So, yo, Adam, how you doing, man? How you doing? What's up? Scroll up a little bit. Oops. I want to ask you also about top structure in Elliott wave, if there's some specific indication because of certain waves like overshooting B or something like that. Said, well, top structures on a weekly time frame, there is a higher chance of topping out with a high amount of volume, or on a monthly chart in the final candle, because of the amount of people that join the market as we go up. So they don't want to miss out. They buy, and then your wave 5 could be your extended wave, or at least your highest volume in the top type of blow off top type of move. When we look at topping structures, then I think from a Elliott wave point of view, your first move down should be a higher probability impulsive structure, right? And that's an important one. On the 1 hour, even 15 minutes, but on a 1 hour, 4 hour, you want to have a high probability impulsive structure, change the market structure. Like, for example, I think one of the most perfect bear market turns was here. I think one of the most obvious structures here was this one, right? I mean, it's a beauty, no, from an Elliott wave point of view. So we have arguably a 5-wave structure down, change the structure, move to the upside is clearly corrective here, right? And then you just look down. You could either sell here or you short it, stop loss above all-time high, and that's the invalidation. But this was a very, very clear topping structure. They're not always as perfect, but this was definitely one of the more obvious one. Changing the structures, sharp move down, corrective move up. This is what gave it away. It's the corrective move to the upside here. So yeah, but topping wise, high volume is nice. Over here, this is the same, right? 69K. I mean, this is a 4-hour chart, right? So it's not like, oh, we made a high, the top is in. But you're going to be aware of, okay, we got an impulsive structure to the downside. We get a 3-wave correction, right? So I always say, wait for a range to form. Not interested in participating here. But if we then get a range, which is higher probability corrective, it's interesting to short. Invalidation. Do I know that this is like all-time high at that moment in time? No, but there's a chance, right? Because of the analysis on a higher time frame, right? There's at least an opportunity. No. So it's not like, do you know it's a top, but it's the chance of topping. So on a high time frame, on a daily, even on a weekly time frame, we got to be very aware of at least the potential of topping sometime soon. Even like if you have ridden this move to the upside, there's no problem selling here at all. 1, 2, 3, 4, 5 potential top. Cool. If it goes up another 50K, then so be it, right? Like there's no sadness that there. Like if you're like, I've had my run, I'm good. I go home and like enjoy the money. But the range, the first leg down, that's the most important. So if we have a top and we come down, I want to see an impulsive structure to the downside. And then I want to see a bounce corrective. I look for another move down. Is this going to be a market structure change bear market? Potentially, right? But you at least have to be aware that if you do get a 5-wave down and a corrective move up, and we are looking for wave 5s on a weekly and daily time frame, there is the potential that this is the beginning of a bear market, right? So in other words, when price is doing this, at no moment in time are we thinking end of the bull market, right? And then we get this range over here. There's no way that this is end of the bull market, right? So even if we get a 5-waver down here, right? Look, this is not, if this is 2, this 4, low probabilities, right? So, we start another range, potential for a diagonal here, but it's not highest probability to end. Why? Because we look for 1, 2, we need a 4, preferably of at least similar size. So therefore, from a trading perspective, you still look for a 4 and a 5. But now that we have a potential 5-wave structure, any high that we make afterwards, and of course we count local time frames, but every high we make afterwards, if you do move down in a 5-waver and then a 3, this can be your bull market top. And that is why my trading, right, my swing trading is significantly different here, right? I mean, arguably here, compared to here. The way I approach the chart as a trader is very, very different at the beginning of a run compared to when a run is ending. Because I don't want to be, I learned my lessons the hard way. I don't want to be that guy that like has a run on his hands, right? Has a run on his hands or this one here, and then be like, oh fuck, and now, oh well, let me just hold through the whole bear market. Like, so I approach it in such a way that I don't get into, I don't hold in a bear market, basically. Okay, a very long answer. How did you turn off the price and time on the... just go to the settings. Just right-click settings, and then you'll find it there. You can turn everything off. adopted, but that's fine as well. You can use the tools that I use and make them your own as well. Maxwin, personal experience. Yeah, no worries. In the end, and I missed the move. When you're starting Elliott waves, it's difficult, especially in the beginning. Also, even trading Elliott waves seriously is very difficult. In the beginning, I think the focus should be on education, not really trading. Of course, you can take bite-sized trades, but focus more on education. Get a notebook, get a pen, go through the beginner's guide on my channel, check out the website, the Elliott Wave website, LINKTREE, and then Elliott Wave website. Not affiliated, it's just a great website. So focus on studying first, then implementation, then trading, because the trading comes when you know more about probabilities. But you'll only know how to calculate probabilities if you know the targets for waves, the extensions, the retracements, the volume, the time, etc. Right? So that, and then based on this, you calculate probabilities, and that's then where you trade. Or if you want to keep it very simple, the only thing you do is this corrective or impulsive, right? So if you're trading, we can take any range, right, for that matter, and you'll be like, okay, we have a move up, right? Okay, cool. But this retracement, is it corrective or is it impulsive? What's the probabilities? Well, you get your notebook out and you'll be like, okay, impulse 1, 2, 3, 4, 5. No, I can't count an impulse. Okay, multi 1, 2, 1, 2, 1, 2. Can I count a multi 1, 2 here? 1, 2, 1, 2. Oh no. Okay, 1, 2, 1, 2, 1. 2. Okay. Maybe, right? It's definitely not ideal because 1, 2, 1, very long wave 2, right? You know the rules and the guidelines. So this second wave 2 is a lot bigger than the first wave 2. This one, this wave 2 is also very big. It's not great because Elliott, every next 1 and 2 is a lower degree 1, 2. So preferably they get shorter in time and price. Okay, not ideal. Multi 1, 2, not great. And then you're like, okay, diagonal. What's the chance of a diagonal? Okay, well, we have a wave 1 here, and then we get our 2, and then okay, 3, 4. Okay, preferably get another low in a 5, and then Okay, so diagonal is an option, right? Preferably make another low. That's your 5. Get a 3 wave up, and then a move down. But as long as you don't get that move down to take the low, probabilities are arguably higher that this is corrective and you're looking for the high. So that's how you can use it for trading. And then if you do move down, take out this low. That's not an invalidation. This is the invalidation. And you test support. If you get a 3 wave bounce, that's the get out moment, right? That's like, okay, time to get out of the trade, right? Because now, oh shit, probability is higher to take the low because we have a 3 wave corrective structure up. So, it's and that's how you keep it easy, right? Is a range corrective or impulsive? If it is corrective, you look for, in this case, corrective, you look for the high, right? Sharp move down. Corrective, you look for the low, right? So that's how you can also approach a chart. And what I love to do this when we get stuff like this, right? So you get a move up, this range on the low time frame, we got to go to a 3, but corrective. But we don't have to analyze these. We get a move up, we get a 3 wave correction, 886 touch, right? If you analyze this here, your best bet would be 1, 2, look for a 3, but we never got the 3. Or 1, 2, 1, 2, but then price moved up and touched the 886 again. So higher probability it's corrective. You look for this high, right? Another 3 wave, right? You make another high here. Another 3 wave structure. This is, I'm on a 1 hour, but you can go to the 15. Okay, 3 wave, right? Move back up, hit the 886. Probability is higher to take out the high, right? Look up again. Another move to the downside, right? Highest amount of volume. Where do we prefer to have the highest amount of volume in an impulse? In a wave 3. But then we need a 4 and a 5. We never got a 4 and a 5, right? Bearish scenario here was 1, 2, 1, 2, 3. Never got it. Went back up, changed market structure. Cool. Look for the highs. You see what I'm doing? So I don't necessarily need to know every structure. I think the most important things are know the 3 impulsive structures. Impulse 1, 2, 3, 4, 5. Know that the highest amount of volume is most commonly in the wave 3. Right? Know the diagonal 1, 2, 3, 4, 5. Right? And then the multi 1, 2, 1, 2, 1, 2, and boop. Right? If you cannot confidently count any of these 3, look for a corrective structure and price to continue in the trend that it's going, right? We have a move up. Oh, higher probability is corrective. Look for the high. Corrective, look for the high. Corrective, look for the high, right? Etc. 3-wave corrective, look for the high, etc. Right? You just keep doing this. So you need to wait for it to be corrective, and it takes a little bit of time, right? So this one here, this is tricky, right? This is an impulse to the downside. You don't know if this is corrective or not. So you may have missed this, right? This is an impulsive move down, and then you get an impulsive move up. Okay, or it might be a no trade area, right? You have no idea at that moment in time. This is corrective, flat, but still, wave C of a flat is an impulsive move. So that might be one of the moments where you're like, okay, I don't know what's going on, so better to stay out, right? But that's I suppose, a simple approach. Simple approach is only thinking, is it corrective or impulsive? You don't even have to know what corrective structure. The only thing you need to track is, can I count an impulse, diagonal, or a multi 1, 2? If I cannot, with high probabilities, count any of these 3, think corrective, trade in the direction of corrective, right? Which would be continuation. And don't be greedy. Put the stop loss at invalidations, guys. Right? If you're Elliott wave, if purely Elliott wave trading, trade in validations. Being greedy will hurt. Unless you then use additional support and resistance levels to get better areas of interest and whatnot. Yeah. So, okay. Yeah. After wave C, triangle, WXY, or a flat. Alts would suffer, and most people are on alts. That would be interesting. Yeah, I'm definitely thinking about that's something I covered this in the beginning of the stream, Victor. So it's nice you highlighted. I covered a move to the downside. If you take out 94.7, got to be very, very aware of this. Yeah. We already covered this. I was surprised your subscriber count. Thanks, Ace of Trades, and thanks for being here and chatting as well, man. As a relatively new sub, I mean, you've been in the chat already more often, but appreciate the support, man. Demo accounts. Elliott Wave does seem very hard. It's a lot of memorizing. Take it if you want to learn it. Just bite-sized steps. Take it slow, because if you want to go too quick, or you get frustrated that after 3 months you don't understand shit, you're like, you're gonna give up. Take it. It takes time. Elliott Waves 2 years. Just take at least 2 years. Do you use Bybit for daily POC? For all of them, weekly, daily, and the template is in Discord, by the way, and the monthly. Risk management is the key to long-term success. Amen. Yes, they were all Elliott Wave people. For 500K, what's your target? Maximum 174. Or anything below that. I'm thinking, like at the moment, I don't get this, right? You're at 100K at the moment, and people talk about 500K like, what the fuck? That's insane. We'll talk about 500K when we reach 450. There's no. I think this is very much getting views. Just put in the title 500K Bitcoin next, or this random shit indicator tells us that the bull market is just about to begin. We're at 100K. We'll take it level by level, right? We go up and take it easy, and we analyze every new range that forms. And based on the range in the future, we know if we continue to higher levels, right, 120, 140, etc., or not. and we go down, and that's the end, and everyone leaves crypto again until the next bull market, basically. So yeah, target 81k to 174, which is a big area. That's now, of course, reduced to 108 to 174, basically. Answer this, or wait. Oops, it skipped to the downside. Yeah, so I answered this. In-app Elliott wave isn't for majority of people. Most people find it too hard, and as you said, just when, yeah. Like what I think is quite cool though is that if people don't really have the time necessarily to learn Elliott waves, they come hang out here on the channel, they watch the update in the morning, and they're that's the way to consume Elliott waves. But as people, even if they watch the videos, they will learn, because in the videos I generally explain how do I pull certain levels, why are probabilities the way they are, and it's still, if they repeatedly watch, they will eventually pick up some stuff. I try to keep it easy, but it's still Elliott waves, you know. I can't make it easier than it is. I still have to use certain terminology. All the high follower channels make it too simple and appealing to noobs. That's why they get a lot of views. Let's hope we stay a low subscriber channel then. I will remember this comment if maybe one day, I don't know how many years that would take. We're at 15.8k in 2 years. So imagine we reach 100k in I don't understand the algorithm. Start of 2024 was absolutely insane. And then after that, it dips again. And then sometimes it just goes up and down. I don't know. I do the same thing. Same shit, different day. But let's say that in 5 years, 6, 7 years, you reach 100k at some point. And I will think about that comment. What's the most likely scenario? Answer this one. Quality over quantity. Cheers, Guns. And I can only agree. The goal of the channel, quality first. Cheers, no joke. Yeah. You know, everyone has different experience with different analysts. You know, some people will probably hate my analysis as well, because I analyze a bullish scenario and I analyze a bearish scenario, but then I give the probabilities, right? But if people only look for one direction, which actually is not Elliott wave analyst, you want to always have one bullish, one bearish, and then have the probabilities. Then yeah, I'm probably not the channel for that type of person that just looks for one direction. I explain the why behind a scenario, like why is the probabilities higher for this compared to this, for the bullish or the bearish. And that theoretical part might make people leave or not watch the video, or but that's fine. You know, I think everyone has their own audience. I'm very analytical as a person, which probably reflects in my audience in a way as well. And that's fine. You know, I also think the people that are on the channel, if I check Discord, it's the people that are very interested in learning, in education, in improving, in sharing, in communicating. It's a great community, which is not thanks to me. It's, by the way, right? It's thanks to you. Of course, I ban the guys that are pure shit, right? But luckily, I rarely ever have to do so. But it's awesome to wake up in the morning and then check all the. I love reading the channels when I wake up, and then I check. Okay, what happened in the Gold Elliott Wave channel, and in the Bitcoin Public Elliott Wave channel, and in the Bitcoin TA channel, or maybe some alts and others. I like to read. I like to see, okay, any new updates, anyone has maybe something good in there. Some interesting counts, maybe I can reply, do a couple of emojis. It's fun, and I can see that people are serious, right? It's not the pump and dump type of person that visits this channel and hangs around. Probably they just leave. They enter, they're like, fuck, this is way too difficult. Okay, I'm out again. And the people that are like, wait, so it can go up and down, those are the people that also leave because they don't understand that an analyst actually needs to cover up and down and then explain the probabilities, which is what we do in every video on the channel. But you know, that's there's it. You know, the channel attracts a certain person, and maybe the cap of this channel is where we are now, 15, 20K, who knows? But I guess the more videos you post and consistency eventually gets you to 100 at some point. But it's not necessarily a goal like, oh, I need 100 subs. No, I do YouTube for fun. You know, I do my trading. That's cool. Got that going on, and then I like to do YouTube and be part of the community. And we know we have 15.8K subs, and I'm happy. I was also happy with 100 subs and 5 subs. Oh, cool. Oh, wait. People are interested in me making a video. Okay, that's cool. You know, like, hi. Yeah. So, but I gotta say, if you have more viewers and more people subbing, it's a lot more fun being in a live stream where the chat is rolling and you got shit to talk about and talking to yourself most of the time. But that's the grind in the early days as well, of course. So, you make a video. The effort is the same. It's just the ROI basically of your time versus viewer numbers, or that's what changes. But yeah, quality over quantity. And the channel actually has improved a lot thanks to you as well. I listen to the feedback. It's very client-centric, I guess, or customer-centric, even though you're not my customer, you're a subscriber, but I guess subscriber-centric then, is so a couple of things that are thanks to feedback is adding probabilities. The polylines was my idea, but based on the feedback, I kept it. So else it was gone again. I did it once and people were like, holy shit, we actually like those polylines, man. So probabilities, the polylines, showing the CVD in the videos and the news. Then there was Maurits. He was the one that said, if you have the fibs on your chart, can you please put the time or the price in there? So back in the day, if you go to very old content, I never used to have the price in the fibs. I just mentioned. I always say the price. So I was never like, oh, I would need it. I was like, the most common target is the 05 to the 786, which is, and then I would put my cursor on the 05, and then I would look to the right. And then at a certain moment, someone was like, yo, man, can you put this on the chart? It makes it easier. And I was like, sure. Yeah. So there's different things that improved thanks to viewer feedback, and I always try to listen to improve, which also then adds to the quality, I suppose, because I'm only one person, I have one idea, but then you have many people watching and they have maybe additional ideas, and then I can check if I can put them in the video. A lot of chatting. Can you share your thoughts on ETH? That would be a next one. I already said, of course, 40 minutes ago, I got to go. But Ethereum, think about a triangle, Antonin, on the daily time frame triangle and the current move down, your wave E of a triangle. Shouldn't move below the previous low, though. But at least consider a triangle. If you do take the low, WXY. ETH, still highest probabilities is to take the all-time high at some point. Jeremy, what's up? How do you get FIB time for wave 5? FIB time for wave 5, take the FIB time from the start of 1 to the end of 1 to the end of wave 4. Toggle on the 1-to-1. If not respected, go to the 0.618, 1.618, 2.618, 3.618, etc. What do you get when you're in silver? That's like short-term updates. So wait, let me just show you. Of course, price action has been relatively calm. But what I do is I basically write everything down. So let me go down here a little bit. So sometimes there's a lot happening when the chart is very active and very volatile. Of course, I'm very active and volatile. But in the morning, so this was this is what I generally do every day. This was the post from yesterday. So I then write down the scenarios and their probabilities, but this is some additional stuff. I keep writing. So where's my next post? Wait, okay, there we go. So the local range here. So I write everything. I make my pictures. You can also then read it inside, right? I add the probabilities as well. And I do that every day. Also in weekends, actually. Most of the weekends, at least. So, and I also talk about CVD. If there's anything happening between the content, I write it here, or of course before the live stream or what. So of course I posted this here before the live stream, and I posted about the bearish CVDs at the high, where I then said here as well, like keeping an eye on the daily naked point of control in the daily, even though we weren't there yet, right? I was talking about, okay, I'm looking for the support to the downside, right? So yeah, I'm very active. And if it's a more volatile day, then I'm more active than on very quiet days, because of course it's, in between update and videos and things I write here, and in the early morning, I write here as well with my full overviews, which is this type of update, sometimes 3 pictures, sometimes up to 9. So I don't actually know. I must have one. If I do a full, here is one, 5 different. This is the daily time frame stuff. So levels of the box, it's all sorts of great stuff. So yeah, that's what's going on in silver, which I just write a lot of different things, updates here, right? Like 618 is touched. So yeah. Sometimes a bit random. Nice. So this is quite a fun post. It was a 24th of January. I actually used statistics in this post, like actual data, and then gave a conclusion to it as well. But yeah, I mean, you get the idea. No? There's a lot happening there in between the videos and the live streams, especially on more active days. Not so much active days. It's less active, of course. Welcome to Bronzeville, man. And Yannis, welcome to Silver. I mean, you asked the question, I answered the question, and welcome to the team, man. welcome. We'll get you sorted. Probably Jeroen will see you come. I don't know as well. So you probably filled in the form. We'll get you sorted after the stream, man. Took a while. No worries. Some people take no days. Some people take years. It doesn't matter. Some people will never, and that's fine as well. It's all about what are people looking for, right? If YouTube is enough, then that's fine. So. And if they look for a little bit more here and there, then yeah, there's things in the memberships. Do we have a higher amount of volume here? I think we do have a candle here with a higher amount of volume compared to what we had here. So we at least got to be aware now of the potential of another. I don't like to count this 1 2 1 2 1 2. Probabilities remain higher for 1 2 1 2 3 4 5 4 5. So of course we had this support. If this support fails, then that's when life becomes a little tricky for Bitcoin. Point of control just below here. So I wouldn't mind testing this. It's definitely an area of interest. Let's see if we analyze this range. Oh, we also have the value area low of this range in the same area. So we could actually minimize this to this and then a bit bigger. Include the point of control. If we then also take a fib from the low to golden pocket just above or on top of. That looks pretty neat, no? A bit of support. If you go to the low time, oh really? You mean this one? That was when we touched the daily. This one is not. This one was in the range, so that one is not really interesting, of course. Oh, ooh. Oh boy. Oh, we. How's your M4 Max doing? Oh, it's doing very good. I'm very happy with it. It's very fast. I love laptops that are very fast. Yeah, I can't, man, when it's slow. So no, the M4 Max is, and it's of course it's my first Apple system, but I'm doing well with getting used to it. And sorry, my ring is hitting my glass. And getting used to the system. I think there's still many things that I haven't yet discovered. Little shortcuts and things, but time will tell. But I'm enjoying it. Oh, contest, man. We were indeed talking about the X's and the Y's. Yeah, wives. Yeah, I know. The guy that can I say this in English? Someone says something, but you give it a twist. Yeah. It's the futures on Atas. Atas is a software, external software. You can download it, and it's free for crypto. Atas, ATAS, and just write trading behind it, and you'll find it. And then in Discord, there's a template for point of controls and stuff. And then it's the Bybit BTC USD futures chart. Did TA with his YouTube statistics? Probably bull market, bear market, bull market. Actual low good enough. I mean, the low is good enough for the bullish scenario, and we got to find a bit of support. So preferably 1, 2, 1, 2, 3, 4, 5, another 4, another 5, hit support, and that would be your bullish scenario, where this then becomes a flat A, B, C, and then you continue. If you take out this low, that's when it starts to be more tricky for 2020, 2028 for the bulls. Alam, welcome. Calling them a flip-flopper. Oh, I actually didn't see the comments. Let me have a look. Oh, wait. And this is like, oops. So sometimes it's very, very rare for me to have such a comment, but this is like, I enjoy the vibe on the channel. And if someone is not vibing, I just immediately hide user from channel. And then basically that person can still watch the content, but I'll never, and you as well, will never, ever, ever see a comment of that person on the channel. I don't reply to such things anymore. Back in the day, I sometimes did, where I was like, I'll reply. But nowadays, if you are so sad that you have to write something like this, and I'm just like, okay, it's good. Have a good day. So it's funny you say it, because it's very, very rare to see such a comment on the channel, like, or something similar, like. So I don't know what it was, but we won't know anymore, at least. Cheers, Ace of Trades. Appreciate it. And yeah, the community. It's, even though it's like Kunst trading community, man, I act in that community like I'm a member of the community, which I am. It's just I write in there all the time, usually in the gold area, of course, but That's why I'm very active. I always write and type and share and whatnot. But yeah, I really enjoy reading and observing and seeing what happens there. What happens after the 5-wave move down here in the 50? After a 5-wave, you look for a bounce. And if you do not take the low, then this is preferably C, and you move up and take the high. So, in other words, if you would end, so 1, 2, 1, 2, 3, 4, 5, 4, 5, right, hit support. If the move up is impulsive, 1, 2, 3, 4, 5, correction, continuation, it's good. The move up is corrective, right? Then downside, take the low. That's a bit of a problem for bulls. Because preferably the bulls do not take this low at 94.7, because then just this range is going to be so long, man. It's so long. You can still count it as like W and then have another X and a Y, but you can, like, when do we stop? That's the question. When do we stop with labeling W, X, and Y, right? Like, yes, we can still cover a WXY. It's just that probabilities, if you take this low, become 50-50. Because the bearish scenario will increase and it becomes a 50-50 thing for continuation up or taking the low at 91. That's going to be your probabilities if you take this low. It's just going to be waiting. Because we have some support to the downside. I'd still expect a bounce, but if this bounce is corrective, right, you look for the low. If this bounce is impulsive, we will be able to identify it, then we look for higher. But that's the 50-50. It then becomes the bounce, right? Like, okay, impulsive or corrective, and then we will know. And the reason it's then also more 50-50 is because of the size of this range. Look how long this is compared to the move up, right? We are at like what, 9 FIB time now or something. It's insane. If you make another low, let me check here. Pop, and then do the up, and then where are we? Like 8? No, even more. Yeah, 9. Yeah, we're at 9. 9. That's crazy. It's like the 49K low, but that's so uncommon, man. And even the 49K low can still be counted as a wave A of a triangle to finish a WXY, and you only start the impulse later in the range, right? That actually, from a probability perspective, would count nicer, but this range is very long, very long. So it's not great if the bulls take the low. It's just not, I wouldn't like to see it, right? Preferably you hold, oops, my chat. Preferably you hold it. Where is it? Community. There we go. If you don't hold the low, then bearish probabilities go up. And then if you get a bounce here from support, we still have some support here. That's the final area of support. So I do expect a reaction, right? It's still an area of some decent support here. I think some people have a daily naked point of control here. I at least have a normal point of control. I think the 786 fib is in there as well. Yep. So yeah, there's still good support, but then it becomes like, oh, the bounce, and it's a 9-time longer range than the move up, and that's when things become it's just not nice Elliott waves. Social Blade predicts you'll hit 100K by February 2028. Okay, so that is literally in 3 years. That's shorter than I expected. Wait, Social Blade. Let me see what. Wait, Social Blade. Social Blade. Okay. Okay. So let's have a look then. That's me. Wow, I can't even remember the last time I visited this. So what are we now? Country is oh wait, probably my YouTube channel is still Dutch. Oh, doesn't matter. Uploads. Ooh, we're almost at 2,000 uploads, by the way. That's insane. The this is when the channel was created, but the first upload and when I actually started using the channel was the 20th of February 2023. Okay. 600 subbies in the last 30 days. Last 30, almost 100K. Estimated monthly earnings. This is always so random, man. Like, because they don't really, the ad revenue is very up and down. It very much depends on amount of content generally. Live streams versus videos. Right? very, very like, look how big the estimation is as well. It doesn't really make a lot of sense. And then we have the YouTube stats. Oh, wait. Can we see 2024? Yeah, this was, wait, monthly gain views, monthly. Yeah, the subscribe. Look at this. Look how high this was. 1,560 subs in January. But that was when we had that sharp move to the downside, the 3rd of January, 2024. I'll never forget that day. I had 500 to 600 people live watching on the stream. That's one of the reasons this was so high. But then the next time also, and then in March I was on. I got wed. I was married, so I was gone for the month, and then poof, we came back. Month of March, and then April also like crazy. I don't even know. So here it goes up and up and up, and then you had this like move, and then we are back to where we were basically, which is perfectly fine, by the way. It almost looks like a heartbeat. And then the expectation, future projection, just checking on chart. Future projection. Okay, so the end of this year, 25. But then I go to the US, I have a ski holiday, and probably later this year, probably still South Africa at some point because of the family of my wife. So maybe a bit less, because I go on holiday, I can't upload every day. And then 100. Oh yeah, Feb 20. I mean, that's probably quite realistic. 50. 1 year, there's no way. Oh wait, that's 2 years. 1 year and 10 months. It feels very far away. 50K. It feels very far away. Yeah, but yeah, I mean, in the end, it all just stacks up, I suppose. It's just, I really love making content, and then at some point we hit 100 subs, and then we hit 1,000 subs, and then 10K subs, and it's insane. It's insane. Thanks, Hermes. Appreciate it, sir. Thanks for your comment as well. May have been one of the first, but thanks for your comment, man. I appreciate it, and thanks for being here. We've been live for a long time, for a very long time, 2 hours, 10 minutes. Last, preferably, we still get actually another 4 or 5 if we look for an impulse down on the 15. So where is it? Oh, there you go. And now I'm not sure if the volume is increasing. So we do have quite a bit of volume coming in. On the 1 hour, it's higher. So that's still okay if you look for the green 3 to end, but you look at least for another range in a 4 and then another 5. Right? So you don't want this move to go too far, because then you don't have any space left for another 5. The lower this move goes, the more problematic it is to hold this low, basically. Your alternative is, of course, ABC, where this is W, X, and then you have A, B, 1, 2, 3, 4, and this is your 5. Wave Cs can end on a high amount of volume, but the only way the probabilities change bullish now is if you hit the 618, or at least move above the previous range. But as price is dropping, and likely still drop a little bit further, at least to support the 618 drops as well. And then if the next range is forming, this range, if it touches the 618, that's when a wave 4 for a 1, 2, 1, 2, 3, 4, 5, 4, 5, that it's gone. That's when we invalidate. And then we label this ABC. And then we look for price to take out the high. If you do make another 4 and then another drop in 5 and then retrace, your bullish scenario becomes wave C is finished, WXY or ABC flat finished, and then we continue, right? So you look for a bounce. Alternatively, a 3-wave corrective structure, but then you take the low again, so that's bearish. So yeah, it's price falling. The volume increase it's typically most common for 3. So yeah, this volume actually is higher than the volume here, which is fine for a 3 in the green. Looks like you missed out on a lot of subs because you got married. Maybe, but I'm pretty sure that the marriage was more important to me than missing 1K subs in a month there. So yeah. Exactly, maybe a Band-Aid. Again, volume is definitely on the high side here. So look, if you are going to move down to the red point of control before starting another range, not good. You look for price to take the low probably. And then you're going to end up at 94. At least not good for the bulls, good for the bears. So we have been online for 2 hours and 22 minutes. Time for me to call it a day, guys. So gotta continue. Still have some other stuff on the planning. Let me check my Yep. There's a lot of stuff happening and I gotta get to it. So okay. Of course, we had a lot of like analysis and stuff in this live stream, like during the live stream. But just a very short summary before I head out. Let's remove this. That's the point of control. But we have a box there now, so let's put that there. Okay. On the higher time frame. The probabilities remain higher for the bulls, where the range that we're in is a 4. We still look for a 5. This wave 4, right? This is your target area, which is big. Preferably you don't move below 85. I have no problem taking this low, but don't move below 85. This wave 4 also move below the lower degrees wave 4 here, right? It's perfectly fine, but you don't want to move below the lowest degree 4 here. This is your final area of support, 85. It's the start of the daily gap. Not great if you lose that. Yeah, but anyway, 4 and 5, right? Alternatively, oops, where is the other scenario? You have a finished 3-wave structure at this wave 4, and you look for continuation and price not to take out the low at 91.1K. That's a hard invalidation for this scenario. So probably I do like this one actually, with the bigger 4 and then one more high and a 5. Now if we then zoom in, what did I have here again? Oh yeah, by the way, yeah. So if price, this is going to be a little bit of a mix on time frames, but if price takes out this low, probabilities are going to increase for bearish scenarios as well, where it basically becomes a bit of a 50 and a 50, because your bullish scenario is counting this as an impulsive structure, corrective, and impulsive. But if you take this low, then this range is going to be very long in time compared to the move towards the upside. Currently here, we are at an 8 or 9, what was it, chat? 8 or 9 pip time compared to the move up, meaning this is like 8 or 9 times longer than this, which is not great. And if you take out this low, A, B, C, or 2, that is 9 times longer than the move up, that's not, time-wise, that's not high probabilities. Now, the reason it still is a bit of a 50 is because we have some support here. And yes, we can count W, X, and then a Y and find support. But if this move up would be corrective, look for the lows. And then it's basically moving into the 80s, right? Impulsive, 1, 2, 1, 2, up. Okay, cool. We look for the high and 105, right? So that's the thing, 105 or 87. Make your bet. Right? If you take this low, it's all about the reaction of support, and that is what we're gonna keep an eye on. But we're still looking for a 4 on the higher time frames. So if then we have this wave 4 in red. And if you would indeed then move down, then this is something I track. So we then have our W and then our short X, WXY, short wave X, also short in time. It's not an invalidator. Wave X's and B's can be short, but then you have a short X and then diagonal correction and then move down to touch the support. You can see a big target area here between 89 and 85. That's basically a must hold area. Okay, and then on the 1 hour, all right, for this to still be bullish, we want to count this as a subdegree 1, 2, ta ta ta, and then your whoops. All right, so you look for a flat ABC or WX ABC in a wave Y for more sideways, but commonly would be a flat ABC. But by all means, this is your invalidation. Last area of support is, let me remove this here, this white box between 95.6, 95.9. If that doesn't hold, look for the low. And also on a 15-minute, if you continue down here, probability is just if you don't get a range, right? Bounce, range, final move. That's okay. But if you just do this, becomes a struggle for bullish counts. Because counting this as an impulse is preferably done like this: 1, 2, 1, 2, 3, 4, 5, 4, 5. So you still want to see a 4 and a 5. But if you don't get a 4 and a 5 before this support, or at least on top of it, then you're going to look for the low, basically. Right? There's no signs of strength on the chart at the moment. So we had big bearish CVDs here. Those played out. Price moves down, and price just keeps falling to the downside. So that is your impulse to the downside. Now for the bulls, if you want to count A, B, C, then it has A, B, 1, 2, 3, 4, 5 in C, and that support. Price then has to move up, and you need to first touch the 618 wherever the low is made. Touch the 618 taken from this high here to wherever the low is going to be. If you then touch the 618, we count this as ABC. We look for price to move up and take out the high. As long as you do not touch the 618, price goes down. Until we finish a 5-wave structure, 1, 2, and then 3, 4, 5, and then we look for a bounce. Wherever that bounce is. Going to B. Now, of course, then that also means that as long as you don't take this low, the bulls still stand, but it's not too great here. So I'm very patient here with price, and take this low, final area of support. I would expect at least a bit of a reaction, and then the bounce. If you do move down here, the bounce up corrective, look for lows, impulsive 105. So it's either 87 or it's 105. Ta-da! So that's the summary. That is what we are looking for locally. So definitely the 15-minute time frame is most interesting, and the 4-hour time frame or daily are the two more interesting time frames. The 1 hour here is not too interesting. It's mainly about the local time frame, the local move down. is currently most interesting. And if you do hit support, the bounce that one could look for is also most interesting. And then we just basically leave out all of this crap here. So there you go. That is it for me. Okay. Geez, what a live stream, eh? 2.5 hours. We don't do that very often. Thanks for being here. Thanks for hanging out. Thanks for all the chatting. And tomorrow, a new day. And in the morning, of course, a new video. So let's see where price is tomorrow morning. Tomorrow, by the way, we do have, I want to show this, high impact news. Wednesday, we got stuff, right? We got stuff. So volatility is expected tomorrow. Yeah, this is going to be interesting. So I'll make sure to try and be live at 2:30 to observe the chart together with all of you, because that is likely going to be a bit of like a decision day to get us out of this range. At least let's hope that's going to be the case. We've been in there for long enough, in my opinion. So, thanks everyone for being here again, and I will see you again tomorrow.